Hi, welcome. Thank you for joining the afternoon session. I've been told I have the task of getting everyone back in the room after the coffee break, so I hope people come in the room now. So I wanted to start off this session really with sharing a story, a personal story, because I think it's very relevant to the conversation we're about to have. So my personal story is that I'm from the UK, from London. My career started in investment banking. I was one of very, very few women on the equities trading floor of Goldman Sachs on the pan-European sales trading desk. And I was there for about 10 years. And I then transitioned, I changed careers, and I transitioned into the pharmaceutical industry. And I did that for a couple of years, and then I moved to the US. I moved to New York, where I live now, after I got married. And I was in business development at the time, and I was working around the clock, traveling everywhere, presenting posters and whatnots in that field. And then I was pregnant for my now almost 6-year-old son, and I spoke to my boss at the time about maternity leave. And I had in the back of my mind the UK, where I came from, and I thought, well, this would be great. I can take up to a year off, paid leave, maybe get a bit of mentoring going back. Great. He looked at me quite blankly, really, and said, well, Rita, we can offer you 6 weeks off, unpaid, and you have to file for disability to get that. So that was like a slap in the cheek, if nothing else. And I remember still going into that room, still like it just happened, feeling so excited to almost announce the beginning of the new chapter of my life, but leaving on the verge of tears, almost like I had done something wrong, almost like I was a child and I had been caught stealing a pack of crisps or chocolates or something like that. And it was a really startling feeling. So I quit that job. And I took almost 4 years off on a career break. My 2 children are 21 months apart. They're now 3.5 and 5.5. And after my career break, I thought, you know what? I'm ready to go back into the workforce again. And I was quite good at staying in touch with old former colleagues of mine, both in the finance and the banking side of things, as well as in healthcare. And I met with them for informal coffees and chats. But the other thing I noticed was that not once did anyone ask me about my background and what I'd done and my credentials, or how this could even equate back to the workforce. The questions I was getting was very focused on the gap in my resume, like I had been branded by the fact that I was now a quitter because I decided to resign from my job. The fact that I was not ambitious anymore because of that fact. I was being told things like, well, Rita, you out of everybody know this is a cutthroat industry and there's no room here for anyone who's not ambitious. And I'm thinking, are you saying I'm not ambitious? You know, what's that about? And I found that like the slap on the other cheek. And then, as some of you might be aware, that recent research from Harvard Business School came out that if you took a career break and you've listed that on your resume, you are 50% less likely to get called in for an interview than if you had a career break because you got fired. And that's the reality of what we as women are dealing with. And that's a very conscious decision that, you know, this could be men or women that reading your resumes. So I decided, you know what, I've met so many incredible folks during my time off. Most of them happened to be women, and quite a few of them happened to be mothers. They had very unique stories, but very similar stories to tell. And that's really why I guess, decided to do what I'm doing now. So when we talk about the discussion we have coming up about what are we going to be doing to help women, what are we going to be doing about this gender space and investing in this? Well, what my company does is we bring talented women back to the workforce. And it's twofold. We work with this talent pool to really build on confidence, rebuild the skills that have maybe been lost, confidence again. And on the back of that, we also work with companies to educate them, because this is a bit of a cycle. It's not just one way. We work with companies to really help them on their retention strategy. When people do come back into the workforce, whether it's from outside or your existing employees, how do you re-assimilate them? How do you keep them there so they don't end up leaving? And we all know this, when people leave a company, it's not always because of the company, it's because you don't get along with your boss and something happens. So part of what we do is not just educate these returning people coming back to the workforce, these women, but also the management and also the teams as well to create a better team dynamic. So that's just in a nutshell what my story is and why I'm passionate about this. But there are so many different ways of solving this issue of gender investing. And we are here to hear about these ideas. And we have an amazing panel coming up right now, and I'm absolutely honored to be joined by these highly accomplished professionals from the public and private sectors, from the VC worlds and funding backgrounds, discussing the issues surrounding this very timely topic. It's my pleasure to introduce to you, and I'm going to start from the left to the right. On the public equity side, we have Diana van Maasdijk. She's the co-founder and executive director of Equileap. We then have Dr. Gitanjali Swamy, who's managing partner of IoTask. We then have Katherine Onge, the director, Syndications and Institutional Partnerships of Calvert Impact Capital. We're going to hear from them first, and then we're going to go on to the $1 billion Fund for Women, Shelly Porges, who is co-founder and managing partner. So on that note, I would like to pass you over to Diana, and please tell us about your thoughts on this.
Thank you, Rita. Thank you, and good afternoon. Now, this panel is about research and the research that is out there. So I thought I'd start with a couple of questions and research here in the room and ask you, how many of you have been to London? Raise your hand. Now, it's lots of finance people. Keep your hands up. Okay, how many of you have been to London and have taken the tube, the subway? And how many of you remember that warning? What is that warning you hear in the tube? You can mind the gap. That's where my story starts. Because a couple of years ago, I was thinking about that together with Joe Andrews, who lives in London. I live in Amsterdam. And we were both talking about how fed up we were of minding the gap. Now, we weren't talking about the gap at the London tube, but we were just very tired of constantly hearing that we have this incredible gap, part of what you also mentioned, Rita, which you sometimes show up in our CV, but a gap in pay, in gender pay, a gap in leadership, a gap in the type of works when it comes to gender in the economy. So we were discussing that and we're saying, are we going to continue at this rate? And the very sad news was that the World Economic Forum was telling us it's going to take, at the rate that things are going right now with gender in the economy, it's going to take 217 years for us to have gender parity. That's 7 generations. That's not for us, for our children, for our children's children, for our children, no. So we thought we've got to speed things up. So we created Equileap to take a leap towards gender equity. And this is an organization, and we thought, what do we need? So what do we need to speed things up? Let's go and look, and we thought we need to look at the biggest employers around the world. And who are they? Those are the biggest public companies. And we need to find out data and find out who's doing what and where are they in gender equality. 2 things we needed to do this was first a framework, so a gender equality scorecard that would allow us to really measure gender equality within the companies. And luckily we didn't have to start from scratch because there were already quite a few frameworks out there, including the Women's Empowerment Principles of the UN, that we could look at and we could inspire ourselves and see what are the things we're going to look at in order to be able to say, where are these companies on gender equality? So we developed this gender equality scorecard, and like you can see here, it's quite broad. It looks not only at gender balance in the board and executive levels, but it looks at it throughout the whole company. It looks at the promotion of women from the workforce to senior management. It looks at a number of policies. It looks at whether companies are giving parental leave to both mothers and fathers, paid, flexible working hours. Now, all of this, and this is what we put together, and then we said, now the second thing we need is data. So what we did is we brought into our database all the publicly listed companies with a market cap of 2 billion or more in 23 developed economies. That gave us 3,000 companies. This was all in 2016, and we started collecting the data that we could find. So some of this data is really difficult to find. And that were researchers were doing. And the other data, sometimes you can collect raw data, like women on boards, percentages on the executive level. And so we started collecting the data and doing the research. And we were quite tough with the companies, saying, if we go through your annual reports, your corporate social responsibility, and we don't find if you do or don't give parental leave to primary and secondary caregivers, you won't get points for that. But if we do find, we will start scoring you. So this is what we did. And last year, and then last week in London, we launched this annual Gender Equality Global Report and Ranking, where we have looked at the 3,000 companies and we say, who are the top 200? And what are they doing? What's the kind of score they're getting? Which are the countries? Which are the sectors? So the good news is that the transparency now is there, and we have these top 200, that this is available online on the Equileap website, and you can get it. The bad news is that even the top scoring companies, when we score them against this criteria, on average, they're getting a C+. So there's a lot of room for them to improve. The good news is last year they were getting on average C, so now it's a C+. But the interesting things, and I just wanted to very quickly share with you some of the things we found for this year. So for example, we found that not all companies have an anti-sexual harassment policy. But of the ones who do, 59% of the North American companies did. And in Asia, it's 30, and the laggers here are the European companies. Or for example, we looked at the gender pay gap, and we found that really only 5 companies in our whole database were publishing their pay for 3 levels in their bands, so let's say the work floor, the managers, and the executives, and they were able to tell us on those 3 levels there is equal pay between men and women. And here are 5 of the companies which were telling us this, and we were able to say these are the ones that are doing this. Another one is that we can tell you now that the top sectors of publicly listed companies are communications, financial, and utilities. But also comparing last year to this year, we can say that one of the sectors which is doing quite poorly, but it seems to be advancing quickly, is technology. And this gives me hope, because this kind of shows you that the sector that is getting a lot of critique is probably getting somewhat their act together. And we can do these kinds of charts where we see the 19 criteria on one side, and here it's divided by region, but we can provide this information per company, where we can then say their average scores between 0 and 100, they're scoring this way, and we can compare one company to the other. So this is the kind of data that we're doing. Now, why does this matter, and why do we think this is going to help us to close the gender gap in the economy? Because this is data that we're making available for free when it's the top 200, but we're actually selling to asset managers so that they can create investment funds and investment products with this data. We launched this, the first people who started launching a product with one of our funds did that last year in October. And since October, oh, not yet. That sheet's not there. But since October, we now have 620 million that is being invested in different products around the world following the Equileap data. And there is 4 ETFs, 1 gender bond, and a number of products that are really interesting. And the interesting thing, or the one thing that makes me the most excited about this, is that these are all products that are scalable. So we're talking here about the public assets, but all these products, especially the ETF, people can walk in there with 20 euros, $20, but they can also put in their millions, and these are all scalable so that we can include that. So I'll leave it at that, and thank you for your time.
Deanna, thank you. So we've heard from your perspective that Equileap's research is not only widespread, but investigates 19 cross-sector gender equality criteria, as a result of which $620 million have been invested into this public income and equity products to date, which is fascinating. So thank you for sharing that. Gita, if I can move on to you, please tell us about your research from the VC side. Thank you.
Hello? Okay, perfect. Now, I was told to beware because it would take a few minutes to move. But nonetheless, let me introduce myself. My name is Gitanjali Swamy, and to tell you who I am the woman who is going to ask you 3 very hard questions. But this presentation represents some of the work that I am doing with the Equals, United Nations Equals Global Partnership for reducing the digital gender gap. And I guess we have the wrong set of slides, but nonetheless, here are the 3 questions. The 3 questions that we have are, number 1, do we really understand the true cost of the lack of gender diversity and inclusion? And the second question that we need to ask is, are we really doing everything that we could possibly do in this context? And that means from the perspective of setting boundaries, from the perspective of setting the right economic incentives, and from the perspective of changing social norms. And finally, given these 2, are we in a position to genuinely create change, given what we have? So let's address these questions in order. And I'm going to move around the slides a little bit, so please bear with me here. The first question is whether, are we really doing, do we really know the true cost? And the answer is, well, let's give you some data here. It turns out, and I'm sorry, I hate when this happens. Okay, great. Turns out, women form more than 50% of businesses, new businesses in the United States, and about 30% globally. So yes, they're a very large participant, but what's really interesting about these businesses is women have 2x the capital efficiency, which means the amount of revenue that women generate for the same dollar is twice what men generate. We're just more efficient. Women also have a greater percentage of higher growth businesses that are growing more than 30%. And it turns out that gender diversity is actually good for business in terms of a 53% increase in return on equity, a 19% more increase in innovation revenue. Gender and diversity and innovation are highly correlated, and a 6% increase in net profit margin. So, and finally, there is a negative cost, and a pretty substantial one, to unfriendly, predatory, and non-inclusive practices. In fact, we did research in conjunction with the University of California, UCOP, their investment entity, and what we found was that when there was predatory behavior in the form of sexual harassment, discrimination, violence, inappropriate behavior, the performance declined between 22% to 47%, depending on which performance metric you used. So actually, you should be doing diligence on sexual harassment because it leads to better investment performance. And you need to weed these things out, right? There's a very good business reason. So let's address the second question. And bear with me while I go back and forth here a little bit, which is, are we really doing everything that we should be doing? And great. And so the answer to that is, tragically, we aren't. And here's the case for it. First is, there's a huge disproportionality in the amount of investment into women. So more than 97% of venture-funded businesses have male CEOs, right? And only 6% of VC investment professionals are women, and 90% of portfolio investments have 0% women in leadership. And it turns out women, even in just the seed funding ecosystem, have stagnated around 4%, despite a dramatic increase in the number of women seed stage investors. So this is actually kind of scary. And what's more is, there are very, very strong social norms that show that consistently women are undervalued. And so there's some very interesting research from, that shows that, the same man and the same woman would be categorized differently. So let me just I'm getting the stink eye from Rita, so let me just make the point. So the other point I'm going to make is, so are we really doing everything we could do? Because there are 3 kinds of things we can be doing. We can be putting in rules and boundaries. We can be encouraging them by creating incentives in investments, but most importantly, we can be enabling different values. So, to conclude, here's the important thing to keep in mind as we go forward. There's a famous quote from Paul Samuelson when on Kuznets' work on GDP calculations, which he did in 1932, and he commented. He said, "When a man marries his maid, the GDP falls."
So we've heard about gender lens investing in the private equity and the public markets, but now I'm going to take us on a journey through the private debt markets, which some may say is the sexiest of all asset classes. It's not. But I work with Calvert Impact Capital, and we are an impact investing firm. We basically manage a private debt fund, and we make loans to organizations that are creating positive social and environmental change all around the world. And these are typically organizations and funds that are outside of mainstream financial markets. Some examples are affordable housing developers, microfinance institutions, renewable energy funds, small business lenders, just to name a few. But we have been investing intentionally with a gender lens for about 7 years now. And I think this community, the impact investing community, is completely on board that investing with a gender lens is good for society, the economy, and financial returns. But we often work with mainstream financial institutions, retail investors, institutional investors, because those are our investors through a bond we issue. And we often hear a lot of confusion and a lot of skepticism around gender lens investing, especially in the private markets. So what we did was try to face those complaints right on. So one of the big issues is people don't know how to invest with a gender lens. It does sound a little bit confusing. So we created a few frameworks, and we have them on our websites for questions people can ask when they're actually underwriting a deal. And then what we've done most recently, and what we hope really contributes to private sector investing, we've heard that there's just not enough data. There's not enough data to prove the business case for investing in gender. So what we did, or what we're in the process of doing, is digging into the decades of our investment expertise to essentially show that you can achieve financial outperformance when you're investing with a gender lens. And at the end of this month, we should publish an extensive research study that essentially shows that companies with the highest percentage of women on board and in leadership positions outperformed those with the least. So for this study, we looked at 162 companies that have been in our portfolio over 11 years. We looked at 1,400 data points about these organizations represent over $23 billion in assets under management. And essentially for each of these companies, we looked at the percentage of women on boards and in leadership positions, and then looked at the return on assets, return on sales, and return on equity. And we based our methodology off of the numerous studies that have focused on the public markets, hopefully to remain very consistent. And we had 3 main findings, or these are some of the ones I find most interesting. You'll have to read the report when it comes out later this month. But one of them is that, on average, greater gender diversity does equal better financial performance. So we looked at, over the 11 years, companies with higher women in leadership and board positions do have higher return on assets, equity, and sales. We also found that financial performance of these companies with the higher percentage, that financial performance was less volatile. And these companies with the higher percentage also rebounded much quicker from the financial crisis, both in the US and when international companies were affected. The second main point was that diversity is important. So the ratio of female to male positions is important, not just the number of women in a company. We found that once a company exceeds 33% of women in leadership positions, we observed a more significant increase in financial performance. We also found that the financial benefits slightly taper off after you've reached 60 or 70% of women on boards or management. And I feel, I've often found people, skeptics of gender lens, say, well, you can't just have women running the world. And I think this shows that that is not the goal. It's not going to be outperformance if you have 100% women, but it really is equity and diversity that is going to lead to better financial outcomes. And the third, thank you. And the third point is that location really does matter. So women's participation in both leadership and board levels is significantly lower for our international clients. Just to give you an example, the bottom quartile of our US clients when considering percentage of women in leadership and board positions has an average of 1 woman per every 11 men, whereas our international clients average 1 woman per every 26 men. And it's similar for boards. In the US, it's 1 for every 7 men, where internationally, it's 1 woman for every 13 men. So part of what we find really exciting about gender lens investing is the potential to affect change. So this last finding, the difference in diversity between our US and international clients, shows that investors really have an opportunity not only to invest in diverse companies and take advantage of that financial outperformance, but also educate the less diverse companies about the value of diversity and the value of an inclusive workplace. During our due diligence for all of our companies, those that focus on gender, those that don't feel like they consider it, we ask questions about gender because we think it's critical to understanding their business strategy and also the potential they have for success. And we actually incorporate gender-based goals and milestones in some of our loan agreements to hold these companies accountable. So what we're really excited about this research is basically that now we have more proof that diversity and gender lens investing really does add financial value, especially in the private markets, since there's not been that much data out there so far. So thank you. Look forward to talking more.
Katherine, thank you so much. So to sum up, you're saying asking questions about gender should be part of your standard due diligence process because it's critical to understanding the company's strategy and potential for success. And there is now data to back this up. So thank you so much. Now we've seen that women are in these markets. What can we do about it? Shelly has a $1 billion fund for women, so please enlighten us all. We want to find out what we can do. Thank you.
Imagine if Bill Gates, Steve Jobs, or Mark Zuckerberg had been born in Asia, or Africa, or Latin America. Do you think they would have realized their potential? Now imagine if each of these great innovators also had a sister who was equally innovative, equally determined, equally hardworking, equally focused. Do you think she would have the opportunity to realize all of her potential? My former boss, Secretary Hillary Clinton, used to say that talent is universal, but opportunity is not. And that's what we at the $1 Billion Fund for Women are really all about. You could say it's like equaling the playing field, but it makes me think of a quote from Ruth Bader Ginsburg. Maybe some of you have seen the movie RBG, documentary recently made about her extraordinary life. When once asked, well, how many women should the Supreme Court have on it? She quickly answered, 9. And they said, well, wait, that's not fair. That's not gender balanced. She said, well, only for 250 years, and then we'll have parity. Because for 250 years, we've had 9 men until the first Sandra Day O'Connor was named to the Supreme Court. That was her way of responding. Well, we believe in diversity. We believe in, as we were hearing about all the results, there is a limit but the limit has not nearly been reached. So let me share with you what our vision is here. There is a $1 billion, in fact, a multi-billion dollar plus funding gender gap. In the US alone, $85 billion was invested, venture funds were invested last year, and only about $1.9 billion of that was invested in women-founded companies. And even if you include the companies that had a woman on the team, it's about 14%. So there's a massive gap, and that's in the US, and when we move overseas, the gap is even wider. And yet, as you've seen throughout some of these presentations, and I won't repeat it to spare the time and to allow for some time for questions later, every study that has been done on this issue, whether it's First Round Capital's review of their 300 companies that they invested in over the last decade, looking at the diverse companies that were founded by diverse teams and women-founded teams versus those that were male-only, they found over a 10-year period they had a 63% benefit, higher ROI on the diverse teams and women-founded teams than they had on male-only teams. So earlier, I think someone on the earlier diversity panel said, yeah, but I don't really believe the data drives investors' things because it's really a cultural thing. But somebody else said, yeah, but data can spark their greed, and greed does drive investor behavior. And I think we all know that. Investors are looking for returns. They may want to change the world, but they don't want to do it at the expense of their overall portfolios. Well, the good news here is that investing in women is not just the right thing to do, it's the smart thing to do. And, again, you've heard a plethora of data here as to why that's true. One of the interesting points, recent study, this is a brand new study that just came out about a week or 2 weeks ago, is that there's an estimated $1 million gap per startup getting funded. So these are some of the problems that we're seeing. And again, women-founded companies deliver higher ROI than all-male teams. You heard about the efficiency that Gita mentioned, in terms of money invested into women-founded companies. So again, won't recap all of that. Our solution is fairly simple. We have decided to mobilize a consortium of venture funds, a global consortium of venture funds, that are ready to pledge an incremental amount of dollars into women-founded companies. Our definition of women-founded company, not necessarily exclusive women-founded, although 20 to 30% we find are, but companies that are diverse, that not only have women founders on their leadership teams, but also on the cap table. Very, very important that women also have ownership. And we're doing it this way because one of the big gaps that we've seen is not only do women have the challenges of raising money that you've been hearing about, but so do the funds often that are investing in women. And believe it or not, there are now multiple dozens of funds that are doing that at one level or another. And we thought, what if we gave them a reason to increase their commitments? Let's start with the funds that are already investing in women-founded companies. Gave them a reason to increase their money, and then expose them to two new pools of capital that they don't often tap very effectively. One being the institutional funds, institutional investors of all sorts, and the other being high net worth individuals, whether it's through their family offices, their wealth managers, or directly. Now, on the latter, I think you all know that we're living through one of the greatest transfers of wealth we'll be seeing in our lifetimes over the next decade. In the US, that's estimated to be about $30 trillion, going from boomers mainly to millennials. But of that, $22 trillion is estimated to go to women. Why? Because the men usually predecease their wives, transfers to the wives, and then from the parents to the children. So again, out of the $30 trillion that will be estimated to be transferred in personal wealth over the next decade, 22 is estimated to go to women. We think that's a huge opportunity. Part two of and we know that women are also more mission-driven, and when women are presented with opportunities to invest in other women, they're, in the context, of course, of a full portfolio strategy, but at least on the margins, invest in them, that there's often a positive response. And then for the institutions, well, we've been hearing for years many types of institutions saying that they're looking to diversify their portfolios. Oh, but oops, we can't find the binders of women. Remember that? We can't find the funds that are investing in the women-founded companies. Oh, and P.S., we don't do that kind of work on the ground. We need to have intermediaries, helping us move there. So we said, let's provide that. Well, we were given an opportunity to launch this at the World Bank meetings last week in Bali. And that was about 2.5, 3 months ago. And we thought, how much could we possibly mobilize in that amount of time? And we thought, well, we'll give ourselves a stretch goal of $100 million that we would announce, first part of $1 billion, that we would announce by the time of the World Bank meetings last Thursday, literally a week ago. And I'm very happy to report to you that as of last Thursday, I think that's on my slide here, we reached $460 million in that, I think you'll agree, short amount of time, of pledges from companies, a lot of them US-based, I admit, for now, 4 Asian firms, 1 MENA company, 1 MENA fund, and one very exciting fund, the first ever fund of funds of 15 women GPs called Different Funds. So we have a total of 33 funds currently. We are rapidly increasing. The more we get the word out, the more we're hearing from funds that want to join it, that are ready to make the pledge. And it's a very simple pledge. We asked them really for only 3 things. 3 things for now. One is, what is the dollar amount that you're willing to pledge that you will invest in women-founded companies between now through 2020? So, of course, we need to give them a little bit of a runway. They need to expand their deal flow. They need to be able to have time to vet and make the investments. And then part 2 is, give us the permission to use your name and give us the permission to use your logo, and that's pretty much, and give us a quote as to why you think this is a good idea. And that's pretty much it. It's very, very simple. We figured that in order to get to a big number, we had to remove the barriers to entry, make it super simple for them. So, where are we now? Well, we are moving on to our next phase. We launched at the World Bank meetings. We have quite a lot of interest from institutional investors now to look at these funds. I had meetings today, even while this conference was going, I had to run out for a bit, come back with one of their big investment bankers who also attended this event. And we have numbers of meetings with others. And we invite you to look at our website, thebillionDollarFund.org for now, and look at our funds, see if it makes sense for you. And if you know a fund manager or yourself are managing a fund, please reach out to us if this is of interest to you. We do not reveal what any individual pledges. We only aggregate them. A few of our funds have chosen to publicize it themselves because they're proud of the incremental commitment they're making. As an example, Gobi Partners, which is a $1.1 billion fund in China, came to Bali in order to do a signing ceremony with us. So they really wanted to let the world know that in contrast to their 16 years and only having invested $12 million in women, they're now pledged through 2020 to invest another $50 million. And we're excited when a fund chooses to reveal that, but we're not revealing those individual pledges. That's really up to the fund. So we are the $1 billion fund for women. We want to change the landscape, change the paradigm in which women founders are working in. And we want to contribute. Obviously, public equities are a much bigger asset class, but we in this sector, in our asset class, want to really accelerate the change that we see happening. So thank you very much.
Shelly, thank you for that. Just before you leave the stage, Shelly, just got a question for you. For those of us in the room, can you give us some pointers of how do we invest in women, especially those of us who do not have the resources or the capital to be able to do that? What can some of us do to get involved?
The 3 things we ask you to do is, first of all, spread the word. I mean, everybody in this room is in some aspect connected to the financial services industry if you're not actually in it yourself, so I presume you wouldn't have come to this conference. So spreading the word is really useful. I mean, we've had so many people reach out to us and say, hey, my brother-in-law is the head of that at the FT, or, whatever. So that's part 1, spread the word. Part 2 is refer funds to us, as I said, and very importantly, refer folks who are in a position to be investors, whether they're wealth managers, family offices, high net worth individuals, or importantly, institutional investors who are looking to diversify, because again, we not only have the individual venture funds, and we have funds that are both under 100 million, as you may have seen from our list before, as well as over 100 million, but we now also have a fund of funds of 15 women GPs. And by the way, what's interesting, I think, one of the things that's interesting about that, besides the fact it's the first ever fund of funds of female GPs only, but they're not all gender lens investors. 40% are gender lens investors. The other 60% are investing in an array of clean tech, fintech, blockchain, AI, and other sectors. So as with all women innovators, there's innovation that's going on across the board, and we want to bring that to market.
Thank you very much. So when you invest in women, you are in good company. Thank you, Shelly. Is anyone convinced now that they should not be investing in women in the room? So thank you so much. Do we have any time for questions, Drian? No. Does anyone? Okay, so we're all going to be around afterwards, so please come and find us in the reception. Thank you so much, and thank you for your time, panelists.